interesting thought experiment. Do you think markets can move up 6 times from here? Imagine the madness which will take place. It has happened in the past. From 1st Jan 2003 to 1st Jan 2008, in just matter of 5 years, Nifty increased by more than 6 times. Now I ask you a second question. Is it possible for the next 6 years, market gives you zero returns? If in case that happens, can you imagine how many investors would actually stay invested in equity market? It happened from 1st Jan 2008 to 1st Jan 2014. If you look at this horizon, for 6 years, practically Nifty gave zero returns. This is the nature of equity market. When it does well, it does extremely well. When it doesn't do well, it almost gives you boring returns. And at the same time, there are periods when market corrects and crashes. 2008, during global financial crisis, markets corrected by more than 50%. Pandemic, March 2020, markets corrected by 36% in just matter of 21 trading days. How many investors can withstand such high volatility? For these kind of investors who find it very difficult to look at the faces of equity market and at the same time manage their volatility, there's a very interesting idea, a hybrid product which has equity and fixed income. It's called as Dynamic Asset Allocation Fund. They're also called as Balanced Advantage Fund. These funds are very interesting. They decide their equity allocation based on market scenarios. When the equity valuation is cheap, it increases its equity allocation. And at the same time, when equity valuations are high, it reduces its equity allocation. So based on market scenarios, it continuously changes its equity allocation to suit the current environment. The biggest advantage of this fund is that during good times in the bull market, this fund gives you moderate equity returns. During bad times, it still gives you decent returns. When market corrects or crashes, the volatility or the fall in these funds are lower. So in the entire journey, the client is able to get moderate returns with moderate volatility. This fund is not suitable for everyone, but it's suitable for a lot of investors. And let me tell you for which kind of investors this fund is most suitable for. Anyone who's retired, typically those clients who want to put money in equity market, for these kind of clients, Dynamic Asset Allocation Fund can be part of their core portfolio. Even for clients who are nearing retirement, who are around 50 and 50 plus, they should look at Dynamic Asset Allocation Fund as their core portfolio. Anyone who's new to investment, he has not seen the ups and downs of equity market. Whatever they understand about equity is only theoretical. For these kind of investors, they should start their investment journey with Dynamic Asset Allocation Fund. Also, clients who by nature who are conservative or who have a moderate risk appetite, they can have Dynamic Asset Allocation Fund as their core portfolio because it suits their risk profile. The idea is very simple. It's a very simple product of equity and debt which manages dynamically. I hope you understood this concept. Happy investing, stay invested. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.